All right, so for today's seminar, we will be talking about sort of, I would say, the 3 months outlook, right? 3 months outlook of the pound sterling, and we will be taking a look at three different pairs, right? Three different pairs of pound sterling to give us an idea of what we can expect in the next, let's say, all the way to Q1 2020. All right. So first of all, for those of you who are not familiar with who we are, just want to let you know that we are Elliott with forecast.com. All right, and we are one of the leading providers of the Elliott Wave forecast in the market, and you can check us if you want to get more information in our website. This is our website here, elliot-with-forecast.com. We are pretty active. You will see a lot of free articles every single day, whether it is video as well as chart of the day or even just technical articles. You can just look at this resource here, and then free articles. It's very active, it's always refreshed, and you will always get new articles, technical articles every single day. And also I want to draw your attention to our YouTube channel. We got a lot of free educational materials in the YouTube channel. So if you go to YouTube and then you search Elliott with Forecast, this is our channel here. We got a free video of the day almost every day on the weekdays except the weekends. Also, we have other kind of educational materials every now and then, as well as just some interesting analysis, correlation, things like that. So do check us out, and you will get more materials from there. Okay. All right. So so for today, like I said, we're gonna be focusing on the pound, right? On the pound. So let me see here if I can move the slides. All right. So we do have a couple of pound pairs. Now in our service, right? In our service, we have three groups, right? Three different groups. In the first group, there are a couple of pound pairs here. There's pound US dollars, which is probably the most popular one, right? Pound yen, pound Aussie, pound New Zealand dollars, and euro pound. And then in the group 2, we got the pound cat, right? So these are all the pound pairs that we cover in the service. So as you can see, this is basically the breakdown of the instrument that we cover in different groups. Now if you are primarily trading Forex, then probably group 1 is the most popular instrument here in the Forex, right? And also some of the most popular indices here, and also some of the more popular commodities is covered in the group 1. In the group 2, we got more indices, we got a lot more commodities as well. So primarily is additional indices, additional commodities in the group 2, with some of the minor Forex pairs here as well. And then group 3 is primarily stocks and ETF. So if you trade the pound mainly, then basically the group 1 has the most pound pairs right now. Okay. All right, so last thing I want to talk about, we do have a 14 days free trial. All right, so if you guys are interested in our service, you can always try our service for free for the first 14 days. All right, so here we go, guys. So what is the last thing we hear on the Brexit? All right, this is the timeline and the options that we got. So the last news we got is that the deadline has been extended. Originally it's October 31st, right? But because there's an impasse in the parliament, it is extended again to January 31st next year. And then the UK will do an election on the December 12th. All right. So in terms of the options here, there are a couple of options, and these are just some of them. Maybe there are some sort of combination also among this, but the first option is that if the Conservative win, and this is the party of the current Prime Minister Boris Johnson, right? If the Conservative win, most likely then the UK can leave the EU on or before January 31st. Now recall, Mr. Johnson has been able to negotiate with the European Union on the Brexit terms, right? Initially they had a a major stumbling block in the Irish backstop, but they sorted it out. So they got some sort of deal, but then now basically the problem is on the UK side. They couldn't, basically they couldn't come up with some sort of agreement in the parliament, so it got delayed as a result. Now, because right now Boris Johnson doesn't have majority in the parliament, so he is not able to push forward with his deal. But if his party wins, then basically most likely UK can leave the EU on or before, right? I mean, there is also an option before January 31st, because the election is on December 12th. So if he can get a majority, then probably he can have the UK leaving the EU on his Brexit deal before January 31st. Now, this is the second option, is the main opposition party, Jeremy Corbyn, right? If the Labour Party wins, and according to the survey, it is less likely, then but in case they win, there will be second referendum on the Brexit. Now, this second option here is going to be messy, because then the second referendum is going to take time to approve and all those things, so that the deal, the deadline, has to be extended again. If in case the number 2 really actually happens, then the EU needs to be extending again the deadline from the Brexit, because otherwise this January 31st is not going to be enough for the UK to finish all sort of preparation for the second referendum and things like that. So but the EU Donald Tusk, right, has said that maybe this extension is the last one. So I'm not sure. I mean, both the EU and the UK, to be honest, have the intention to avoid the no deal, right? I mean, no deal is just bad for both countries, to be honest. So they will try their best not to do any sort of no deal. And so this has been dragging so long for the past 3 years without really any clarity now. But now they are going to do fresh election and see if Boris Johnson can win majority in the parliament and basically push forward with his Brexit deal. Okay, and then third option is like a minority government. So both parties, the Conservative, Labour, cannot win majority, and they basically able to form minority government by cooperating with some other smaller parties, right? And then hung parliament is basically no party wins the majority, and no party is able to form. Hello, Pep. My name is Hendra Lau. I'm Henry, by the way. Eric is our colleague. But so I'm doing the seminar for today for you guys. All right. So fourth option is that no party wins the majority and no party is able to form the minority government. Then this is called hung parliament, right? So according to the sort of so actually all these options here, the more likely scenario probably is going to be some sort of a minority government, perhaps, right? Or maybe Conservatives win. It depends on what the UK public thinks. If they still are so divided with the issue of Brexit, then probably they're gonna have to deal with the minority government again. But as you can see here, it is very fluid, right? The situation is very fluid. It is as unclear as it is at present compared to the past few years, and it is difficult to predict what's going to happen. But the base case that I have has always been that both UK and the EU will try to avoid a no deal, and therefore at some point this is going to pass and this is going to be solved, right? This kind of my base case scenario, right? Of course, it's just speculation, but it's my base case scenario. Now, because the fundamentals or what these factors are very difficult to predict, right? We're going to look at the technicals using Elliott Wave theory to give us an edge. Maybe some of these pattern or structures in some of the pound sterling will be able to tell us a story, so that we can sort of know what we can expect in the next 3 months or so. So sometimes people say that the market is moved based on the fundamentals and never on technicals, but actually it's I mean, if you want to be fair, it's kind of a combination of both. Even fundamentals sometimes are not really easy to predict, right? Are not really easy to predict, and the technicals sometimes can tell you story ahead of time. because when you understand, especially when you use Elliott Wave, because Elliott Wave is a language that is it is able to tell you something from the behavior or from the structures of the chart that you can interpret as a market consensus. So the chart sometimes can tell you something, and the chart is basically a consensus of the market participants, basically, right? So we're gonna take a look at the three different pound sterling pairs, right? The pound New Zealand dollars, pound Aussie dollars, and cable pound US dollars. So I think the most popular one is cable, but actually the one that is telling us some stories within the pound sterling pairs is the pound New Zealand dollars and the pound Aussie dollars, right? So I'm gonna explain to you why those two pairs are important, and then also what we can expect, let's say in the next 3 months on the movement of the pound sterling pairs. All right. So if you guys have any question, feel free to ask anytime. All right. So let's take a look now. So the first one is the pound New Zealand dollars. All right. So 2 weeks ago, approximately, this is a weekly chart, by the way. 2 weeks ago, this pair here was able to break above the October 2018 high. So the October 2018 high was at 2.047. All right, and 2 weeks ago the pair was able to break above that. Now 2 weeks ago was also the time when Boris Johnson, I think around the time, I'm not sure exactly, but it was around the same time when Boris Johnson was able to negotiate with the EU on the Brexit term, right? So both the EU and the UK finally agree on the Brexit terms, right? And Boris Johnson was able to make the EU change some of the clause relating to the Irish backstop, and so I think some of those changes was perceived to be a better deal than the previous deal by the Prime Minister, the previous Prime Minister Theresa May, right? So now after that development there, we see that the pound New Zealand dollars actually broke above this one. Now in Elliott Wave theory, right, this structure here, we are counting this as a WXY. Now in the Elliott Wave theory, WXY is what we call a double correction or double three. This is one form of a complex correction. So if you guys are a little bit familiar with Elliott Wave, right, I can talk about it a little bit, but you can see right here, we started the rally from October 2016 low, right? So this is the starting point of this rally in the pound New Zealand dollars weekly chart. Now if you look at this move here from October 2016 all the way to October 2018, right? 2 years move here. What do you guys think? Does this look to you like a corrective pattern, or does it look like an impulsive pattern here, if you guys are familiar with Elliott Wave? Now I'm not sure how many of you are familiar with Elliott Wave theory, how many of you are completely new, but just in case some of you are familiar, you can let me know. What do you think it looks like to you? It looks corrective, right? Now maybe the way I look at it is, I'm probably tempted to label this, okay, can it be a 1, 2, 3, and then this is like a triangle 4 and 5, maybe, right? 1, 2, 3, 4, 5. But the problem with that, even though the wave 4 can overlap with the wave 1 as long as it is a diagonal, right? You can have an overlap if it is inside a wave 1, which is leading diagonal, or inside wave 5, which is ending diagonal, or it is inside wave ABC, right? But if you want to label this 1, 2, 3, 4, 5, let's say this wave 1, it really looks to me like a 3 waves, right? It's very difficult to force a 5 waves, right? You guys agree with me? It's really difficult to force this to be a 5 waves. It looks really much better as a 3 waves, right? So if this is a 3 waves, it's really difficult to label this as a 1, 2, 3, 4, 5, right? And then if we look at the pound Aussie dollars, is even more clear that in the pound Aussie case, there is no less kind of option to label it as an impulse. So to me, this makes sense labeling it this way. This is corrective 3 waves. So this is what we call a double zigzag. You have a zigzag ABC ending W. This is your correction of this zigzag. So you have an X. So this is called complex correction or double 3. And then after this, you got another zigzag. So you have 2 zigzags, double zigzags, labeled or connected. That zigzag pattern is connected as a WXY in blue. So that is called WXY double zigzag. So this is a corrective pattern because it's a 3 waves here, it's a 3 waves here, everything is corrective. Now you got this double zigzag here and ended on October 2018, and then we labeled that that rally as a W again in the higher degree. So we got a bigger structure of a double correction, right? The black degree here, WX in the black, is the bigger structure of the double correction. So you got a W here, you got an X here. This is the X here is a correction of the entire rally. This 2-year rally here has been corrected here in the X, and then you got a new high. You got another rally, and then the latest 2 weeks ago, that rally broke above this October 2018 high, right? So you got a pattern in which you have a W, you got an X, and then you have a new high. So if I can draw it for you guys, is this is the same chart, by the way, in our software. So you got a 3 swings like this, and this one is your W here. Now I purposefully didn't break down the sub wave so that it is less confusing, but you got a WXY ended a W, and then you got an X, and then after that you got another break above this W. So this is supposed to be ending your another W. Now a lot of people get confused sometimes with the WXY structure, right? A lot of people get confused. Like in this case, most people only know WXY as a double zigzag. Therefore, this must be ABC. But it is not always going to be a zigzag. It doesn't have to be a zigzag. The sub wave within W doesn't always have to be a zigzag like this. Now it is a zigzag only if this is a 5 waves and this is a 5 waves, because zigzag is a 5-3-5, right? But in this case, you can have a sub wave within a W that is also a WXY. So you can have a WXY within a W, if you understand what I mean. So if it is W, then this one, the sub wave of this, has to be another 3 waves. So in this case, you see the W in blue here. That's when the sub wave is a 3 waves, which is a zigzag here, and this is a zigzag, right? So you can see that the sub wave of the W in the black itself is another WXY, and then you get your X, and then this Y in black. The sub wave can be any corrective structure as well. It can be an ABC, for example. It can be a zigzag, or it can be a flat, or it can be another WXY in the lower degree. Okay, so in this case, what we got here is we are presenting it as a WY, because so far we only have a 3 waves, right? 3 waves is not impulse, so if we end here, this will end a W, because then it's a zigzag. So here we are presenting it as a possible double zigzag again. So once we broke above here, technically you have incomplete sequence, what we call a bullish sequence in the pound New Zealand dollars here, right? Once we broke above this one, this level, October 2018, then we know that, okay, we got incomplete sequence, because then you have a W from October 2016 2018, you have a correction of this 2-year rally, and then you have a new high again. So then automatically that will imply that this move here likely is going to extend to the upside, right? It is likely going to extend on the upside, And where's the target on the upside? The target is going to be this leg equal to this leg, right? That will be the target. So that's why I said at the beginning that this is a view of maybe around 3 to 6 months, right? But the break above that October 2018 actually is telling us, the market is telling us, based on the Elliott wave structures, that we need not worry too much about the Brexit, right? We need not worry too much about the Brexit, because people worrying so much about Brexit, is going to fail, or pound is going to sell off hard, but the pound New Zealand dollars is telling otherwise. Pound New Zealand is telling most likely it's going to extend. All right. So but then at this point though, we are at the extreme level from December 2018 at this moment, because we reach the 100% of this ABC here. We reach 100% in 3 swing. So we are close to getting some types of pullback. All right. If you think about it now, with a lot of uncertainty again with the Brexit, right? Because they are now having to go through the general election, things like that. It makes sense to have some sort of pullback, right? It makes sense to have some sort of pullback. So we should be expecting some type of pullback sometimes soon in the pound New Zealand dollars. But then the structure from 2016 suggests that we should then expect more upside after the pullback is complete. Now we are calling a possible, we're still calling another high is still a possibility at this point, another high. And the reason for that is not so much because of the pound New Zealand dollars, but it's because of the pound Aussie dollars. We will take a look at the pound Aussie dollars so that you will know, because we correlate the market, right? The pound Aussie has a scope to do one more push higher based on the structure, right? Like in the case of pound New Zealand dollars, from December 2018, we have reached the 100% in 3 swing. But in the case of the pound Aussie, from the same December 2018 low, the pound Aussie dollars has not reached the 100%. That's why the pound Aussie can still see one more push higher, and that means the pound New Zealand dollars may also be able to make one last push higher before we got a correction of this entire cycle here. Okay, so if we take a look now, let me show you guys back to the slides. So the path then, guys, the path will be doing a pullback soon, all right? Maybe still one more push higher, but then doing a pullback soon to correct this December 2018, the whole 3 ways rally here. And then as far as the pullback can stay above this December 2018 low, later on we're gonna push higher again, right? We're gonna push higher again, and we'll reach this target area 2.21 and 2.31 to the upside. Okay, let me show you. This is the general structure of the double three. I sort of explained it to you guys before. So the idea of a double three, which is the same as what we saw here, is a WXY double three. Is you have a WXY, and each leg consists of some sort of corrective structure. It can be any type of corrective structure, and so in this case, this is a bearish WXY. In the pound New Zealand dollars, this is a bullish WXY, right? So it's just the other way around. But if you take a look at the general structure here, this is an example in which your W has a flat here. This is a flat, expanded flat ABC, and then the Y leg has a zigzag, right? This is a zigzag, ABC zigzag. This is an ABC flat. So you can have a flat on the left, a zigzag on the right, or a flat on the left, a flat on the right, a zigzag on the left, a zigzag on the right. That's called double zigzag if you have both a zigzag subwave. Or you can have another WXY in the lower degree on the left, and also another W. So it can be a combination of many different corrective pattern, right? So basically, when you got this structure, your target from the Y always is going to be 100% of the W, 100% or 123.6% most of the time of the W. So that will be the target of the Y. So the same thing can be seen here on the pound New Zealand dollars earlier, this box here that you see here, this one is based on the, you know, the Y in the black is equal to the W in the black, and then this is the 123.6% extension. So the target is between 100% and 123.6% of the W here. All right, so that is kind of the general structure of the WXY. Now let's take a look here. This is the Elliott Wave count in the 4-hour in the pound New Zealand dollars. Now recall that we're still calling it possible one more leg higher, right? One more leg higher still is a possibility at this point, and the reason for that is because of the pound Aussie, right? If you take a look here in the pound New Zealand dollars 4-hour chart, now you can see here we're still calling this is 1, 2, 3, and then, you know, we can get buyers here in the wave 4 for one more push higher in the wave 5. Again, if you look at this, we got an ABC here, right? ABC. This is a weekly chart. So in the C leg is a 5 ways, right? Because a zigzag, C leg needs to be 5 ways, right? And that's why you see in the 4-hour here. So this is 1, 2, and then this is 3, and then still possible to have a 4 and one more push higher in the wave 5 to finish that C in red that you see earlier in the weekly chart. All right. Now you notice also here that this push higher, technically, from technical point of view, actually it does not need to happen. And the reason that it does not need to happen is because we have already reached the minimum 100% of this 3 swings rally from December 2018, right? Since we have reached the 100%, technically, from technical point of view, this leg, it does not have to happen. It can happen, but it does not have to happen. All right. So again, the reason we're still calling another leg higher is because of the pound Aussie as the main reason. Now, if you look at the, let me show you this pound New Zealand dollars here. All right. Now, if you take a look at the structure of the pullback so far, do you guys agree with me that this looks like a zigzag ABC? It doesn't look like a 5 ways, right? You guys agree with me? This looks corrective. This pullback here looks corrective, right? This pullback looks corrective, and so yeah. So if this pullback is corrective, that means that most likely it's not going to become an impulse, right? If it is corrective, then it's not going to become suddenly, you know, like suddenly can do something like this, 1, 2, or something like 3, something like that, right? Because in order to be an impulse, most of the time you want to see A5 waves within the first leg, but the first leg here looks to be like a 3 waves, right? So that means this is what we call Elliott Wave hedging. So that means that this move, if we got another leg lower, which we are expecting right now, if we got another leg lower again, this leg here, WXY, a double zigzag, most likely are going to find some sort of support sometimes, you know, in the next 2 weeks probably. Right? Most likely it's the next 2 weeks this is going to be happening, and should be able to find some sort of support, at least. If not going to a new high from here, then at least we can have some sort of reaction higher, some sort of 3 ways reaction is possible from here, right? Because this move is not an impulse. So in our service, we call this this area is called Elliott Wave hedging, right? Elliott Wave hedging is an area in which we believe you will get a reaction regardless. You will get some types of reaction regardless, and then whether it makes new high or not, it doesn't really, it is secondary, right? Whether it makes new high or not, like I said, it doesn't have to make a new high because it has reached the 100%. But then most likely, if it really goes lower, most likely this area, the W equal to the Y here, is going to get some sort of reaction. All right, it's going to get some sort of reaction. All right, so that is in the pound New Zealand dollars. All right, guys. So the pound New Zealand dollars is telling us that most likely the pound will continue to be supported based on based on the break above the October 2018, it will continue to be supported, most likely. And then here you can see, let me go back here really quick. So as far as you can see here, I draw a trend line here, right? So as far as the pound New Zealand dollars here stays above this trend line here in this current pullback, so if you draw a trend line from July, so as far as this pullback doesn't break below this trend line, another leg higher cannot be ruled out, right? Another leg higher cannot be ruled out before we finish this ABC and finishing the W in blue. But if we do get a break below this trend line, then it is possible that we ended the W already and already starting the X if we break below the trend line. Alright guys, any questions so far? So is everything clear? Now we're gonna take a look if everything is clear on the next pair, okay, which is the pound Aussie dollars. All right, let me go back to the slides. All right, so let's take a look at the pound Aussie. Now, also same as the pound New Zealand dollars, about 2 weeks ago, this is a weekly chart, by the way. This is a weekly chart. This pair also broke above this. It also broke above. This is May 2019, right? It broke above May 2019 around the same time as the pound New Zealand dollars, right? That came as the news, came out about Boris Johnson, having a deal with the EU on the new Brexit term. So the pound Aussie also broke higher, right? And now this too also shows the same thing as the pound New Zealand dollars. Now you see from October 2016 low to this October 2018. No, this one is around May 2018. You can see this rally here. Now remember we talked about the pound New Zealand dollars earlier, whether this is corrective or impulsive, right? We talk about it. But if you look at the pound Aussie, I think it's even more clear here. Now how can you label this as an impulse, for example? It's not possible, right? I don't think you can label this as an impulse, right? So this is a flat A, B, and then one, and then a diagonal. The C leg here is a diagonal 1, 2, 3, 4, 5, right? So it does look corrective to you guys, right? This move here, it looks corrective. And then you got an ABC, right? You got a expanded flat, sure, Wanda. So we got an expanded flat ended X with X. So this is a flat on the W here on the left side, and then the Y leg now is in progress because we broke above all this previous peak now. So we are in the progress of ending the Y leg to the upside. Now same as the pound New Zealand dollars, we are about to hit the 100% from December 2018. Now you see these 3 swings here. This 1, 2, and then 3. So these 3 swings is about to hit 100%, okay? And so we should be expecting some type of pullback soon, but since we have not reached the 100% from December 2018, we still can make another push higher. Right? So this is one of the reasons I was mentioning earlier in the pound New Zealand dollars. Now pound New Zealand dollars already hit the 100% from December 2018, right? It already hit to 100% from 2018 in 3 swings, but the pound Aussie has not. The pound Aussie has not. So therefore, the pound Aussie still can see one more push higher. If that happens, then the pound New Zealand dollars likely also can do another push higher still, right? So so that's why the structure looks similar and to the pound New Zealand dollars, and also bullish, because you can see now we got a sequence, right? You got a bullish sequence, high, and now the target on the upside is going to be this leg. The Y leg here is going to be equal to the W in the first leg here, right? So this is the same WXY structure. In this case, the left side here is a flat, and then the right side here is another WXY. Now obviously this one can also become another structure. For example, this itself can become a flat. For example, this become AB. If that's the case, this can continue to go up non-stop, going to the 100%, right? It can do ABC as well, right? But if the structure is correct, then you know, at the 100% you should be getting a pullback first, because then it will end a zigzag here. You will get a pullback first before the next leg higher to reach this target. But both of these pairs, guys, basically are saying that the pound is going to be continue to get supported. All right, the pound is going to continue to be supported because the structure is saying so. The structure is saying so in these two pairs. Now, if these two pairs are going to extend higher, most likely, whether you're looking at cable or any other pound pairs, right? Most likely, the other pound pairs are not going to be weak either, right? Are not going to be weak either. Yes, we can get some sort of pullback. We can get some sort of pullback, but because the overall structure is still remains incomplete on the upside, then any pullback is going to find buyers. Okay, and then the pairs is going to extend higher again afterwards. All right, let's take a look next. This is the 4 hour of the pound Aussie. Okay, the 4 hour chart. Now you notice here that we are looking for the C leg in blue, right? The C leg in blue. So you notice here we have a B, and then now we're looking for the C. So it should be 5 waves because it's an ABC, and we have 1 of C, 2 of C, 3 of C. Now looking for 4 of C before one more push higher in the 5 of C. All right. Let me go to the E signal. So that means, this move lower here is going to find support when it reaches equality of this you know, like WXY here, and then make one more push to the upside, right? For example, on this case, you can sort of project the equality here, and if it goes to a full 100%, for example, now this one looks like a triangle here, looks like a sideways triangle here, right? So if it goes to a full 100%, then this is going to be approximately in the support area for the pound Aussie in the next, let's say, 2 weeks, and then from there the pair can go higher again one more time, since we have not hit the 100% from December 2018. So the near-term target is going to be around 192 before we potentially can end this 3 ways up and then do a bigger pullback before one more push higher to the upside. So it's the same oscillation with the pound New Zealand dollars, right? Pound New Zealand dollars also looking for one more push higher, a pullback to correct to 2018, then resumption of the trend or resumption of the move higher. Okay, so we can see right now that the pound New Zealand dollars and pound Aussie both indicate that the pound should not be that weak, right? The pound should not be that weak. Now, regarding, so like I said, I think we are only concerned about the few in the next, let's say, 3 to 6 months, I would say. right? 3 to 6 months. But what about the longer term view? The longer term view, we are not going to discuss it in much details, right? But you can see here the following. This is the following logic. I mean, if you want to know what the sort of the longer term view. Now, back to the pound New Zealand dollars again, right? But back to the pound New Zealand dollars again. If you look at the easiest way to look at it is this way. A lot of people want to know whether the pound has already bottomed, right? Is this the real low? Because it's been, it's been selling off so much in the past few years. Is this the real low? But then the move higher in the pound New Zealand dollars from October 2016, impulsive or corrective? This entire structure we are talking about here, even if it goes here in the next 3 to 6 months, but the entire structure is impulsive or corrective. It's still corrective, right? Even though we are looking a lot higher in the next 3 to 6 months, but the entire move is a corrective pattern. So in the longer term, you still do not know. You still do not know whether the pound is already bottoming or not in the longer term. And we're talking about years, right? Years. So maybe after it hits here, maybe the pound New Zealand dollars can still, go down again after that happens. It might. But then that should not be our concern. Like I said, our concern is only in the next 3 months, let's say, right? That's going to be our concern. Now, based on this structure, the next 3 months is suggesting that we can see for the upside. All right. Same thing with the pound Aussie. If you take a look at the pound Aussie, this entire move from October 2016 is also corrective. Right? So that means you still do not know whether the pound Aussie, for example, has already made a significant low. For example, here in 2013, has pound Aussie made significant low, or is it gonna break down again to a new low? You still do not know. But what you do know is that the entire rally is corrective. The entire structure is corrective. So you still cannot rule out the possibility that the pound, breaks down again, or at least from here it can do a bigger three-year pullback, at least from here. All right. So that's the pound New Zealand dollars, guys, and the pound Aussie. And we're gonna take a look at the next pair, the cable, pound US dollars. Any question before we look at the pound US dollars on what we talk about? All right, so now let's take a look at the pound US dollars, right? All right, so in the pound US dollars, I'm going to be looking in a more shorter cycle, shorter term. Okay, this is the chart of pound US dollars cable for our chart. Now we notice here that from September 3rd low, right? From September 3rd low, the rally is so far is only 3 waves, 1, 2, and then 3. So far is in 3 waves, and you can see subdivision is okay to be counted as a 5 waves, right? 5 waves here, 5 waves here. This can either be an ABC zigzag, or if it makes another high, then it becomes a 5 waves, right? If it makes another high above this wave 3, then it will become a 5 waves. Now we're calling this potential to be a 5 waves before we get a pullback, or before we get a reaction lower, and then after that another leg higher. So in other words, from shorter perspective, we are looking for more or less further upside in cable, especially if cable is able to break higher one more leg and then forming a 5 waves from September the 3rd. The probability is going to be higher that you will see for the upside in cable. Now this pullback, then after we confirm it by making one more push higher, the pullback is going to find support, the 3-year pullback, as far as we continue to stay above this 1.196. All right, so that is the cable. Now let me show you a couple of other things here. Let me see. All right, so this is cable's chart, and let me show you this one. All right, so here we go. So if you look at the daily chart of pound sterling of cable, you notice here that we are able to break above this 2018 channel, right? So we decisively broke above it. So that usually indicates this is over. This cycle is over because we broke above it. And then especially if the move coming from September 2019 low becomes the 5 waves, that gives us higher probability we should at least getting some sort of ABC, at least. If not more than that, then at least a type of ABC is in play, right? Where you got the first leg as a 5 waves up ending A, then perhaps this 3S pullback is going to retest this trend line again, perhaps before the next leg higher in the C. But you should be looking for some sort of ABC at minimum in cable. Now if you look at the oscillation, this one also looks pretty similar to pound New Zealand dollars and pound Aussie, right? You are looking for one more push higher to finish these 5 waves. Similar to pound Aussie, pound New Zealand dollars can potentially do one more push higher, right? Pound New Zealand dollars can still do one more push higher. Pound Aussie still can do one more push higher to finish this 3 swings 100%, right? And then after that you got a pullback. After that you got a pullback in the pound New Zealand dollars as well. And then you also got a pullback in the cable. Alright, you got a pullback in the cable before one more push higher. So oscillation wise is kind of similar, even though they are not exactly one-to-one, but they are kind of similar. You're looking for a pullback first, you're looking for one more push higher, then you're looking for a pullback before the rally resumes again to the upside, right? Now talking about the pound dollars, of course the pound dollars, the dynamic is slightly different, right? The pound dollars is also heavily influenced not so much on the pound side but also on the US dollar side. And we also want to take a look at the US dollar side to see what US dollar is doing, right? What US dollar is doing, which is very interesting. Now we will spend a little time to look at the US dollars to see if we can really expect, because when the pound is going up, pound is also a component of the dollar index, right? Now of course the biggest component of the dollar index is the euro, but the pound is also one component of the dollar index. So we're gonna spend some time to look at the US dollars to see if it is possible to expect US dollars, for example, to weaken. Because if you do expect the pound to rally higher, then obviously you may also see the US dollars weakening, right? Now let's take a look here. I got a slide on the Fed's balance sheet. All right, so it is pretty interesting if you guys follow the news, right? If you follow the news that the Fed, right? The Fed, they have been, since Janet Yellen in prior to the Jerome Powell, they basically started the quantitative tightening, right? They did a lot of money printing, quantitative easing after the financial crisis in 2008 for 10 years. And then since then they try to normalize their balance sheet by reducing their balance sheet, right? Not reinvesting the proceeds from the maturing treasury. That's what they are doing. So they are draining the money from their balance sheet starting from 2017, right? They keep draining it. At some point it's $50 billion a month, the balance sheet, going down all the way to 2019. And then around October they start to reverse their policy, and then expand the asset again. So October 2019, there were some problems in the repo market. Not sure how many of you are familiar with that, but there is a spike in the short-term funding to 10% from 2%, right? And then a lot of people speculate it's because the Fed doesn't have enough reserves in the balance sheet. So the Fed was in panic mode, and then they started to reverse, and they started to do more QE, even though they did not admit they want, it was a QE, right? They said it's just expanding the balance sheet, right? They didn't want to admit they were expanding the balance sheet, but in reality, this is the chart. This is the chart from their side, the Fed side. So it continues steadily decline because they're trying to normalize their balance sheet and then reverse again. So interestingly, the point of the reversal here, October, right, is also, if you look at the chart, if you look at the dollar index, the dollar index started to reverse. This point here is when the Fed, when Jeremy Powell started to mention their intention to expand the balance sheet again. So because QE usually is related to, when you are doing QE, then you are debasing your currency. So when you're doing QE, your currency weakens. Most of the time, that's how people interpret it. So at the same time, when they do that, you see the US dollar actually starts to turn lower. Right? So US dollar has been steadily gaining strength since bottoming in February 2018, and then after the Fed mentioned their intention, starting to reverse. So you can see the dollar index. What happened now? The outlook, it broke below this 2018 channel here, and it looks like a wedge, right? It looks like a wedge if you draw it like this. And then not only it broke below it, it retested last week. That retest was rejected. It dropped down again, and then on the close of Friday, it actually broke below the October 21st peak. Sorry, October 21st low. Right? You can see this one is if you go to the lower level time frame, you can see the break. So on Friday, it was able to break below this previous low here. So it retested, rejected, and then broke below here. So now you got a sequence. You got a sequence of lower low from this peak here. From this October the 1st, you got this one. You got a lower low. So this could be some sort of ABC, right? It could be some sort of ABC move, or it could be a 1, 2, 3 to the downside, right? So that means the dollar technically now, it is possible it is only at the start of something bigger correction, right? Some bigger correction. So at the least you can expect, for example, the dollar index reaches this area. For example, if it is a simple ABC, it will go to around 95. So if it goes to 95, then obviously all sort of US dollar pairs is going to rally, right? So the pound is going to rally, the euro is going to rally, everybody else is going to rally. But the dollar index chart here is suggesting that is definitely a possibility at this point, because like I explained, not only it broke below this channel from 2018, it broke below October 21st low, creating a lower low sequence from here, from early October, right? Now on top of that, I can tell you what causes all this sudden turn in the US dollars is really after Jeremy Powell started to mention about the Fed is going to inflate their balance sheet again. That's when the dollar starts to turn lower. Okay, so this seems to be confirming to the idea that the pound, therefore you can expect the pound to go higher again. If the dollar index is going to weaken, right, the pound is going to go higher. So then, especially if you got a 5 ways up from the low, that's even more that's even better, right? That kind of confirms to you, okay, you got a 5 ways up, and therefore most likely you can have at least one more push higher likely, especially we also break above this trend line here from 2018 April in the pound. So most likely you're gonna get another leg higher after the pullback is over. Okay, guys. So so that is yeah, that is the presentation for today. So we look at a couple of the pound bears, right? The pound Aussie, pound New Zealand dollars, and also pound sterling US dollars cable, and we can conclude from you know, looking and reading at all those three pairs that the pound is going to continue to be supported in the next 3 months or so, right? Any other question that you want to ask about today's presentation, everyone? Now remember, if you want to get regular forecast about pound pairs or anything else, you can always check our service. We have free trial, 14 days free trial. There's no obligation for you to subscribe if you don't like our service, but we do provide charts, as well as we also do live session, live trading room every single day, and that is one of the key differences that we have compared to other services, is that we are easily approachable, right? We don't just give you charts and let you guys be on the blind to understand the charts, or you know, we're always in contact with you. You can always reach out to us. We always have analysts ready to answer any question, and you can always ask your question in the live session, things like so. It's always two ways, not one way. It's not just giving you charts and let you interpret yourself and not giving any other guideline. So that's one of the key differences that we have. You mean the euro pound? Yeah, the euro pound, it will take time, but I think it should be similar, Roswa, right? We don't have enough time to look at another chart at the moment, but generally speaking, based on these three pairs, right, pound Aussie, pound New Zealand dollars, and so on, you should expect euro pound to go lower as well, right? Usually the pair is euro pound instead of pound euro, right? Usually that's how the broker listed euro pound. All right, everyone, any other question? So let me show you very quickly here in the euro pound, even though we will not have a lot of time to discuss in details, but I can tell you in the case of euro pound, for example, and you notice here that this one from August 12th peak, right? You got a, so far you have what looks like a 3 swing so far, right? So far you have what looks like a 3 swings. So if you measure the extension from August 12 peak, right, so you have incomplete target to the downside. So I think this is only for short-term purpose. For short-term purpose, you are looking at a target on the downside around, let's say, 0.8480 to the downside, since the sequence from August 12 here is incomplete. Okay. All right, everyone. So if there is no further question, thank you very much for joining me today. And the recording will be posted in our website. You can find it if you go to our website, maybe in the next 24 hours. If you want to watch it again, we are going to post it here, usually you know, among the videos, right, the latest videos here. Okay, so thank you very much, everyone, and have a good weekend to you all. and see you all again next time. You're welcome, Peter.